What is going on, everyone? Welcome back. It's been a very long time since I've posted a video. I said I was going to do a series and failed to do it. I think I'm just going to kind of go back to my regular breaking down the charts and then kind of discussing my trade ideas, and then to discuss what Paul has continued to teach us time and time again in his room. And I'll always advocate for Camelback trading. Definitely go check out camelbacktrading.org if you want to get into trading and learn more about how the market works. That is definitely the way to go. But we're going to break down our larger time frames real quick, just to give you guys a update on what the heck is happening, and then in case you didn't already know, and then we'll break into today's trades, kind of discuss that. I felt like I was doing a lot better with my trading whenever I was making these videos, just kind of reviewing what I've done and more or less, what I need to not do, things of that nature. And then it just kind of helps pound these numbers into my head as far as levels and destinations. And we'll be a lot less serious about that moving forward. But I used to give you guys like a bunch of, you know, single print fills, etc. We're just going to run through the charts, discuss the trades, and what I think needs to happen moving forward. So right now we're looking at our monthly chart. All right, monthly chart. The monthly finally, after several months, one time framing up, meaning we set higher highs and higher lows, just kept pushing, pushing, pushing up. Finally, around the 6100, 6150 level, we decided to have a little bit of a triple top, which, ironically was the beginning of this year and then the beginning of this new presidency. Along with that, we finally got a little bit of a, you know, put ourselves back into a balance. And then we began to kind of chop more or less. We just chopped and chopped for about a month. Finally, we came out of this balance and we've been one time framing down, meaning we're setting lower highs and lower lows for the past 2 months. Okay. Personally, I think if this market were to really liquidate and pull back even further, I'm not looking for it to do that. But clearly, this level right here around the 4,800 level will definitely be key. And then moving forward, I think if we were to pull back even further, because we've already had, what was it, a 15-20% decline? Yeah, it was about a 20% decline. Moving back into this area where we kind of chopped around for a while, moving back into that area around 41, 4100s, maybe even the 4000 levels. That's 35%. Typically, we don't see more than a 20% drop, but if we do, the next real push comes down to about a 35% pullback. And that's just going back and looking at, past events when the market's kind of going into a bear territory. The more extremes tend to be 20, 35, and then from that point forward, 50% is your next level as far as the extreme side of things. And so far, we've been pretty extreme and come back into a bit of a balance on our weekly. Technically, it is still down. Our weekly's been one time framing down for quite some time. You can see how we were balancing up here, just kind of chopping between that 6163 level and 5950 level. We were chopping around for a while, and then we finally broke out of it, began to one time frame down, came back into a little bit of a balance here. I haven't updated my charts in a while, as you can tell, but came back into a little bit of a balance, and then just went straight back to one time framing down with this large range here, being very, very large range that week, another large range here, and then we've just kind of ended up with an inside week. So far, we've had a bit of an inside week down that's failed, right? We had an inside week last week, meaning we were inside the previous week's range, right? So let me bring my little handy dandy thing over here. So last week's range was a 650, or not last week, the week before, excuse me, earlier this month, was a 653 point range. The high of it 5520, the low of it 4867. So you can see last week's range was inside of it. 5496 was the high, the low 5251. This week we attempted at a inside week down, meaning we were inside last week's range, broke down below it, and so far we've kind of just clawed our way back above that level of 5250. I think 5250 is definitely going to be kind of the line in the sand moving forward. I think we need to hold above 5250 if the buyers and the bulls want to kind of put this market back into a true balance by taking out a previous week's high. And in order to do that, we need to take out last week's high of 54.96, and that would put us into a true balance. Right now, the market's just down to balance, meaning we could still continue to push down lower and reach these lows way down here at 58.67. Okay. But as of right now, and what we've seen today, that does not seem to be the case. We pushed down lower yesterday, didn't really get much for it. Move this over. Yesterday we pushed down lower. We've been in this pretty large balance for a while. Depending on how you look at it. Okay, when I make it too big. Try to adjust my charts here. But essentially I'm just going to market. But we were for a long time, for the last couple of days, we've been using this pretty much the whole range of this day here where we spiked up higher on April 9th. That was a 539 point range, one of the largest ranges ever in the history of the market as far as a single day. And we were kind of using these ranges right here between 59.30 and or 49.30 and 55.20 on the upside. All right. That was kind of our balance initially. Now, as the days have kind of contracted and volume and volatility's kind of closed off, and I tend to tighten up my ranges. So for me right now, my balance range is going to be 5406 or around the 5400 level, 5401, which is that high there. Is my balance high for now. My balance low being yesterday's low of 5127, meaning, like I said, line in the sand. If we don't hold above 5250, which is pretty much the dead weight middle point, you will come down and test my balance low of 5127. If we hold above that, you should test balance high of 5400. If we get above 5400, I think the 20-day moving average will be right there. If we get above the 20-day moving average, then things could be looking up. Your next destination would be then the gap fills on the upside, because we still have this gap here that needs to be filled. We had a gap down yesterday. That got filled today. We had a gap down yesterday. This was the gap. That got filled today. And then, so like I said, baby steps. What I'm looking for, a hold above 5250 pushes us up into the 5400 level. If we can get above the 5400 level, then we will see how we get above the 20-day moving average. If we can get above the 20-day moving average, then we can start working our way up into potentially that gap, and then not only breaking out of balance, right? Not only will we be breaking out of a balance, but we'll be putting the daily up, and then the weekly will be officially coming back into a balance. So keep that number in mind. I think that weekly high, what was that weekly high? Like I said, a lot of this is just for me. So if you're watching, thanks for watching. If not, then too. It's just how I break down charts. So we really need to get above 96.50, 50, 59, 96.50. So I'm gonna mark this. There, we'll do a little thingy here. Boom. Go back to our daily chart. So yeah, boom. That's what I'm. Okay, cool. That kind of works out. It kind of lines up the way I was thinking. We need to get above 5400, and then we could attack pretty much this big sell tail here around that 5500 level. You get above 5500, you get into that gap, and then start working your way back up towards the 50 and the 200-day moving average. Okay, now it's all baby steps. The daily has to break out of this balance at some point. We may continue to consolidate in between this. It is a large balance. The balance, I mean, it is very large. 274 points. Sometimes we only have monthly balances that are about that big. So that's what we need to see moving forward. A hold above 5250 brings us 5400. Above 5400 brings us 5500. You might have a little bit of a resistance around that 4450 level, which is where the 20-day moving average is currently. But I'm kind of expecting us to move up. I do have two SPY calls. Actually, I have a position of about four SPY calls in there that I'm looking for this market to kind of push up back up into the 540 range in SPY. So that's what we're looking for. Now, what we're looking at now is the market profile. This is what we trade in Paul Asmar's trading room. This is what we look at every single day is the market profile. So if you're wondering why we have letters on our screen, that is why. This is market profile. This is um, each letter being a 30-minute range. So essentially, it's just a 30-minute candle, but it's broke down into segments that we can kind of dissect even deeper. So A, B, C, and all the way through M. There are 13 time frames in the day. If you've been around, then you know. All right. So what happened today? Well, just to break it down real quick, we opened up yesterday was a double distribution day down to the downside. Let me split this so you can kind of see. Was a double distribution day down to the downside. We had a very small set of single prints. If I can't highlight where those were, not gonna let me. Okay, anyway, had a very small set of single prints between 50 or 52.15 and 52.20 that kept the two distributions separate. Right today, I don't know why it's now starting to give me that, but pretty much you treat it as two separate days. Anywhere below 52.14 was the lower distribution. So from 52.14 down to 51.27, that was the lower distribution. Today, moving into today, buyers wanted to open above 52.20, which was the lower end of the upper distribution. That whole range being from yesterday's high 52.62 to the low 52.20. That was what we opened up inside of today. We pushed up, got the overnight high. And once we got the overnight high and took out yesterday's high, it was game over for the sellers as really they wanted to defend the gap that needed to be filled around the 52.85 level. Now, what I did was once we kind of we opened up in the upper distribution, which is very positive for the bulls. I kind of seen that maybe the sellers weren't as strong as they appeared yesterday with the push down that they had. They had an opportunity, failed. So anytime that we pulled back, it was about, I think it was around 52.55, close to yesterday's high, which was also close to the overnight high at the same time. I decided to get long, right? Overnight high was around that same level. So I was like, you know what? I'm going to get long to go and fill the gap. I'm thinking once we take out yesterday's high, we'll have more shorts kind of squeeze out. And that's exactly what happened. We had more shorts begin to squeeze out and we pushed up and, I took profits pretty much right before we got to the gap fill, which was at 52.85. I took profits around 52.80. And then I kind of just waited for opportunities to present themselves. There was another opportunity we pulled back and we were one time framing up in B period. So I got long again to push up, took it off for a couple points. Market was still one time framing up. When C period opened up, they pulled back. I got long. We had a very small set of single prints. I got long to go take out the initial balance high. I didn't really like what was going on in the market at the time, so I stopped myself out for a very small gain. It began to push up, and then I re-entered that trade because they haven't filled the gap yet. So, and they were going to get the initial balance high. It felt like so. I got long as we got closer to B's high, pushed up into that gap filled. I got out of the trade pretty much unscathed. There was really no drawdown in that trade. And then that was basically it. There really wasn't anything else that I did. I did take another trade in E period against the set of single prints. Whenever it pulled back, that worked out beautifully. I wish I would have held on, but I got long around 52. What was it? The low was 52.83. I think I got long 52.85.75. I think is what it was, 85.75. And I was looking to add at the single print fill at 52.80 if they pulled back. And at the time, the 144 simple moving average on the 1 minute chart was right around that 77 level. So I was like, if they pull back and break below that, that is my out. But they, kind of pushed this thing up aggressively. It came up to about 97. I took that trade off because we stopped the one time framing up. I really wasn't expecting a reversal bar and then a spike higher, which happened uh, in F period. Eventually, all that got liquidated in H, I, and J for an afternoon pullback low. But that's pretty much the gist of what happened today. I mean, you were looking for longs all day long as the market was showing you signs clearly in H period when we stopped the one time framing up. Um, you kind of liquidated pretty heavily. I'm sure there were some responsive bounces near the single print fill around that 5304 level. I'm sure there was a little bit of a responsive bounce, but other than that, if you didn't get out, then you kept adding along the way, you probably got hurt. Um, Earlier on in the day, whenever I took that initial trade at 52.55, looking for the push up into the a single print fill. I was talking about single print fill. I was talking about potentially pushing up into 53.30. I said if the market can get above 52.80 and hold above 52.80, I think the odds of going and getting that 53.30 and that point of control right there are very good. Another reason that led me to do that is if we look here, this is our merged profile over the last several days. You see it kind of looks weird, but it's bell-shaped curves all over. But you could see today, if I zoom in here, you see how today, you see all the yellow? That's what you call value area. And over the last week or so, that's pretty much what our value is. So this week moving forward, that's kind of what we look for. We've seen that we did not want to find anybody selling below value low, right? So volume dried up, sellers dried up, and this market pushed up back into value. Now, what happens usually when you push up into a value area? You tend to trade way back up into the other end of value, or at least find a common ground area, which is a Y point of control, which happens to be 53.30. So we got right up to that point today, 53.30, and we kind of backed off initially a little bit. So I think moving forward, 53.30 in the short term is definitely an area we need to get above. If we can get above that, then you can see 53.80. Get above that, you push on the way back up to 54.50 at 5400 level, and then 54.50, and then obviously above that you get into all this up here where there's a lack of volume. So you might see less buying as you push back up into that 5500 level. So yeah, that's kind of what I look for. These high volume areas tend to be areas that we get drawn back into at some point in time. As you can see right here, right? Not a lot of volume, not very many sellers. Buyers stepped in, squeezed the sellers, and look where we came back into the meat of this large profile area. So that's more or less my thoughts on the day. Hopefully it all made sense. If not, then join camelbacktrading.org and check out the room, and you'll learn and understand the lingo and the jargon. So with that being said, I hope you all have a wonderful day. Thanks for watching. I'll catch you later.